So the bank crisis continues, and sort of the theme of the day is don't screw with people's money. There's a lot of things I want to show you guys and go through some of the details of this, and let's just jump right in. So some of the good news, New York Community Bank Corp stock jumps after FTC says it's Flagstar Bank to assume Signature Bridge bank deposits. Now for the bad news. Fate of First Republic uncertain as shares plummet again, and that's after a $30 billion cash infusion. And you can see the charts here. So basically, New York Community Bank, they bought Signature. The thing goes up 31% as of recording. If you take a look at it on the year, it's only down about 20%. Again, this is New York Community Bank Corp. However, the bad news, First Republic Bank, that's down about 30% today. I was actually looking at it a little bit earlier. It was halted to the downside. I think at one point it was like down 50% a day, like those numbers, but it kept crashing down so hard, and it was like getting frozen because they essentially put a rules in place so something that doesn't go to zero. It is really, really scary at First Republic. In terms of like on the year, it's down 90%. And guys, this is sort of why I warned you about, yes, maybe, you can make it with some of these banks, but pretty frank, it's basically gambling at this point. It is just tough to say which banks will come back and which ones won't. I lived through the financial crisis of 0809. It is scary out there. And one of the things that is, you can see this here, is I guess in this particular chart, you got a 1 in 4 shot. PacWest, Western Alliance of Zions is maybe okay. First Republic is not so great right now. They're just having trouble finding a buyer. You got to read the details of this thing, and this will make more sense. So right here, I thought this was a key detail. First Republic, right, talking about the bank here, mid-sized bank based in San Francisco, had lost $70 billion in deposits in recent weeks. Said 2 people with knowledge of the matter. Nearly half of its total depositor base as of the end of last year. The attempt to sell a piece of the bank had quickly morphed into a save the bank situation, said 2 other people with knowledge of the matter. And, when you're talking about this kind of thing, do you want to invest in something or do you want to just donate your money to /save the bank? Now, evidently, though, the big money was indeed saving the bank. This is an interesting one. Thursday, 11 of the country's largest banks gave First Republic Bank, the 14th largest bank, $30 billion in short-term loan. And I'm laughing because, think about this. You got the 14, First Republic was the 14th largest bank, and, the 11 other banks are, giving the money to try to save, their little brother, essentially, or little sister, or you want to look at it. And it was, JP Morgan, Bank of America, Citigroup, Wells Fargo. It's nuts. And evidently, all the money that they were giving them was uninsured. And this is also saying here, First Republic has been seeking search for a private equity firm or another buyer to purchase the stake. There was actually headlines recently that President Biden, that is, was meeting with Warren Buffett. And I would be willing to bet that may have to do with this kind of stuff. Like, hey, Mr. Buffett, would you be willing to buy a bank? I got a bank to sell you. It's kind of like, hey, I got a bridge to sell you, and was it Brooklyn? So, whatever. I don't know what to make of this stuff in terms of who to trust, to be honest, guys. That's why I said it's kind of like gambling at this point. Now, this is a statement coming out of First Republic here. First Republic Bank is well positioned to manage short-term deposit activity, right? This is the emailed statement. This support reflects confidence in the First Republic and its ability to continue to provide unwavering exceptional service to its clients and communities. And of course, they're going to say that this is the sort of downgrades. We've got Moody's and S&P. So they're saying Moody's believes that the high cost of these borrowings combined with the high proportion of fixed rate assets at the bank is likely to have a large negative impact on First Republic's core profitability in coming quarters. And then Standard & Poor's is saying here, substantial business liquidity, funding, and profitability challenges, and that was a downgrade. So basically, people are saying it's not going to be so great. Talking about Silicon Valley Bank, which is sort of the bank that kicked it off, they're trying to find a bid, but no one wants to buy it. That's literally what it says right here. And this is, again, don't screw with people's money. We know that UBS bought Credit Suisse. However, we talked about this yesterday, and this didn't make headlines until today, mostly because, people are getting on quotes. And the headlines I'm referring to is the bondholders. This was the Credit Suisse bondholders. They lost, $17 billion and they wiped out. And there are some people who had these things. So these are the AT1s. I want to read their quotes from you. And again, don't screw with people's money. So this is coming from Paul Kaufman. He's a fund manager over at Aquila Asset Management. And they're saying, or he's saying, in my eyes, this is against the law. Because basically, again, these AT1 bonds got wiped out. He said this was insane, and we've never seen something like this before. I don't think this would be allowed to happen again. Also, too, this is David Serra. So this is a chief founder and chief executive of Albertus Investments, Albertus Investments, and he's saying here they changed the law and they have basically stolen 16 billion of bonds. And I'm sure you guys can imagine if you're wiped out, you'd be pretty pissed off too. And this is essentially fund managers are saying this. This is Jerome Legros. Again, we're talking about UBS buying out Swiss Bank, I should say. And again, these AT1s got wiped out. Axiom and Teller Investments. So this person's saying, everyone knows that when you're buying AT1 bonds, you're taking risk and you're there to absorb losses. Okay. But show me the losses. There's still 45 billion Swiss francs of equity in the bank. So they're basically just calling foul. They're like, okay, we get it that there's risk, but like we still see money there essentially. Shareholders got 3 billion in francs, and AT1 holders got nothing, which is a reversal of the usual hierarchy. And essentially what we're talking about here is some of this money, sort of the big money fund managers, they may sue, try to take legal action, who knows, because essentially you're going against the government. And so my response is good luck with that. And I'm not trying to be mean. I'm just saying this is just, unfortunately, the game is a dirty game. And essentially sometimes in these situations regarding bank bailouts, it is picking winners and losers. And it is unfortunate. It's political, it's financials, all of these things. This is a tough game, and, I mentioned this every now and then, Virgin Orbit. I'm talking about the tough game and don't screw with people's money. So evidently they're considering bankruptcy. And it was interesting because I saw this one the other day, and this is the Richard Branson thing where he's like, going to do space tourism. And actually, true story, we covered the launch live on the live stream. It was kind of fun to do that. And this end up being kind of the endeavors that may go to zero, sort of these experimental things when, the money is flying around. It was last week when they were basically told a bunch of staff to just not come to work, and they were operating on a skeleton crew. And I knew things were shaky. I didn't do an exclusive video on this because there's so many things to talk about all the time. And last it was the banks, but I just wanted to say that, with the banks going down and now you have these kind of speculative type of companies maybe declaring bankruptcy, we're probably getting closer to the bottom. But, I would say the thing is that you're facing right now is a liquidity crunch and also to like a credit crunch, meaning that, okay, so all the banks don't even have enough money for themselves. So how are they going to lend out money to you? Do you see what I'm saying? And this is sort of what we're all watching, and then the Fed keeps raising rates. I think the Fed's probably going to raise 25 basis points is sort of what the rumor mill is having. And again, we're talking about don't screw with people's money. And in fact, Amazon, unfortunately, is firing more people, and this is going to put people in bad shape. And I remember during the pandemic, it seemed like Amazon couldn't hire enough people. Now it seems like they can't fire enough people, and we're talking like 9,000. So it is a real problem, and I've been mentioned several times on this channel. You got to be, thinking about protecting your job, making sure that's secure, because right now that's the surest thing. The markets are unstable, and even some of your jobs, depending on which company you're at. So I'd like to hear where you guys are in the industry that you're in, and how how things are going. People report different things. I think we have people in the community. Some of the defense is probably strong right now, maybe healthcare. Whereas if you're in tech, I think it's probably more the weaker ones. Also too going on. President Xi's visiting Vladimir Putin. So. My opinion on this is China, wants to try to be neutral, but they're not really that neutral. They do essentially pick a side, deciding, if you're going to basically still do business with Russia or not. But I'm sure from China's point of view, he's like, yo, stop the war. I don't know. Putin's crazy. So my opinion, for us to get out of this sort of bad market shape that we're in or bad financial situation, we got to find the end of the war. So we'll see. I don't know what she's telling Putin. If you guys know, please let me know. But I'm just saying they are meeting and are talking about it. Other things are going on. This is a big one, actually. So Macron over in France facing a no confidence vote. Basically, he's messing with people's pensions. Remember I told you guys before, don't mess with people's money. That's kind of the theme of the day. Basically what they do, they want to change the retirement age. So they're saying here, they want to raise retirement age by 2 years to 64. And then extend the time to qualify for pension to 43 years. So again, they want to raise the retirement age to 64, and total time to be working is 43 years. Now, I was looking at the USA comparison. USA is 67 years, essentially full retirement age, that is. And then you got to be working 10 years in the system or /40 credits, which is basically quarters. And so this is sort of why I think it's really quite interesting comparing systems around the world. It's really very different. But irregardless of that, something I mentioned to you before in the theme is don't screw with people's money. And I mentioned several times, I wish I could run, and that would probably be the number one thing that I would run on. Just for real is like making sure you have Social Security, which I don't think is crazy. It should be a winning issue. But this is a real thing, sort of when the economy takes a dive and the government, is facing deficit spending, and this would be anywhere around the world. They're trying to look up to shore up sort of the problems in the budget. So, some of these countries may mess with retirement, like say what France is doing, but people get pissed off when you do that kind of thing. And so I would recommend any U.S. politician out there is don't mess with Social Security. If anything, make it stronger and figure out ways to make sure people keep getting their money. Because if you screw up people's money, people get really, really mad. That's sort of kind of the theme of the day. And, my feeling on the whole market is just manage your risk, right? I would say, yes, market's going to be fine over a long period of time. This is essentially what you're doing. You're investing for your retirement, this kind of stuff. But in the short term, it may be very, very shaky. And if you need the money now, I wouldn't be dumping it in there because you just don't know what's going to happen, right? But if you don't need the money, you're going to be okay. And this is sort of why managing risk, meaning like say, if you do put money in the market and you're not putting too much, not overextending yourself, then you're not like stressing out about it. But if you're taking these YOLO bets on say like these banks, be it First Republic, be it New York Core, be it, Silicon Valley Bank, you're probably sweating bullets. Like for example, the actress Sharon Stone had a whole bunch of money in Silicon Valley Bank. And in fact, if you put yourself in that kind of situation, you're really sweating bullets right now. And essentially, this is all about managing risk. So anyway, I'd love to hear your thoughts on any one of these stories. Again, manage risk. I can't emphasize enough. I'd love to hear your thoughts, and I'll catch you in the next video.